So when rates go down, bond prices rise, and same thing happens in reverse. If rates are going up, bond prices are falling. So a year like 2022, when rates were increasing quite a bit, that was a really difficult time in the fixed income markets where bond prices were falling quite a bit. For those of the investors out there that have taken a look at lots and lots of different cycles, they'll remember that thinking through the fixed income markets at the end of 2022 and investing in fixed income markets at the end of 2022 has been massively profitable, right? We have a big interest rate rise, bond prices fall quite a bit, and it can be a fantastic opportunity, especially in the municipal bond market, which is exactly, what's taken place. I think, one of the most interesting elements of the rate environment, when we sit around our desk and think about interest rates and debate where the market is and where we think the market's going, we of course talk about the FOMC. How is the Fed situated? How have they communicated to the market? What has the market understood with their communications? How is the 10-year Treasury yield situated relative to that? And then we very importantly get into how's the municipal market relative to the Treasury market, because we're always going to be based off of the Treasury market, but the muni market doesn't move tick for tick with Treasuries. It'll tend to lag both on the upside and the downside. The other critical component is the shape of the yield curve. As we know, over the last couple of years, we've had inverted yield curves here for a while, and it really incentivized investors to stay in cash and cash equivalents money markets. A lot of money flowed into money market investments over the last couple of years. As the curve has regained its more normal shape and is now again upward sloping, and then municipals, it's actually significantly upward sloping, that has definitely motivated investors to move from cash and cash equivalents into the fixed income world, especially into the investment grade fixed income world. And munis is a big recipient of those dollars coming from money markets, pushing out the curve a little bit. And I think that'll continue. I think there's a very positive technical environment for the municipal market as more money flows from money market investments out the curve into investments like FLMI, because the yield pickup is now quite attractive for investors.